rotation could be the story to start out 2026, and small caps might be the place to be. Joining me now is MarketBeat analyst Chris Markoch. Chris, so great to have you in person.
I know, it's great to see you, Bridget.
Yes, I'm really excited to talk about small caps. You have a list for us today of 5 small cap stocks that are really showing a strong promise for 2026, for the new year. Really, the Russell 2000 is ending 2025 on a really strong note.
It really is. It's up about 11.6% for the year to date as we're taping this. And that's really where the story starts, because there's a lot of analysts that believe that there's money moving out of, let's just say, the Mag 7 right now, a lot of the AI infrastructure stocks. That's a topic for another video, but right now they believe that money's got to go somewhere. And there's a lot of analysts that believe that revenue is going to be going into small cap stocks in the next year.
Yeah, again, the Russell 2000 chart is definitely showing that strength right now. There are hundreds of small cap stocks out there. Let's talk about how you narrowed this list down to 5 stocks in the small cap sector that you really believe are going to have some strong potential in 2026.
One of the things I did was I used the MarketBeat stock screener. I used the stock screening tool. What I was screening for, Bridget, was not just small caps, obviously, that was an easy one, but then I was looking for ones that had very positive analyst sentiment. And then the second one I used was stocks that were going to have at least 10% earnings growth next year. That's usually above average. I mean, if you get mid to high single digit growth, earnings growth, that's usually considered very good. So I thought if you got 10% or higher, that's even better. And that's what all of these stocks have. So that's sort of the given as we go into this.
And they really cover a wide range of sectors in different industries. So let's dive right in. What's the first stock on your list of 5 small caps to watch for 2026?
Sure, the first one I have is Gorman-Rupp. Ticker symbol is GRC. This is kind of an old-fashioned company. They do pumps and infrastructure items like that. Their products are used through a wide variety of industries. It's not really a sexy stock. It's not really like an AI stock or something like that, but it's a stock that's going to cover a lot of different industries, and it's going to be needed because there's still a lot of infrastructure demand in the United States outside of AI, and that's where this company comes in.
This doesn't sound like a new company. It sounds like one that's probably been around for a while.
It has been, sure.
So why 2026? What about the new year sounds like it's going to have some promise for this company?
Right. Well, so when you look at the future, and you see, again, that given it's going to have strong earnings growth next year. Analysts are projecting the stock to be up probably close to 20% next year. And again, it's just an infrastructure story. Their products are going to be things that are needed to build out the infrastructure in the country.
Parameters you have for the screener to get on this list is that it had at least 10% earnings growth?
It has to be forecasted to have a minimum of 10% earnings growth heading into next year. So they had a little bit of a weak year, and I think that what a lot of people are saying is now that demand's going to change and you're going to see stronger demand. A lot of that's going to be coming from, or is expected to come, I should say, from regulations that are happening from the big beautiful bill that don't kick in until 2026. Once that kicks in, you're going to start seeing more CapEx spending, and companies like Gorman-Rupp benefit from that.
Definitely a different name for our show.
Very much.
Glad to get it out there. Let's get to that second name on your list.
Okay, so the next company I have is a company called UltraClean. Now, this company is, again, it's a small cap company. They provide the cleaning equipment for semiconductors. Now, it would surprise you, it surprised me to know the stock's down a lot this year, down like 16% year to date. But earnings growth is expected to be strong next year. Chip demand's not going away. This company is sort of the picks and shovels for the picks and shovels. If you consider semiconductors to be the picks and shovels, UltraClean is the technology that you're going to need for those chips. You've seen the demand be a little lower this year because you've seen companies like NVIDIA say, we have to meet the demand. We don't have the supply yet to meet the demand. Well, I think in 2026, that cycle is going to change. Now you're going to see demand coming online from the chip makers, which is favorable for a company like UltraClean.
Interesting company, and also very interesting that it's down in 2025, simply because the concept seems like there would be demand for it.
Right.
Why do you think analysts are bullish on the next year ahead for this company?
You know, this is an interesting thing because I think there's a lot of people that have been talking about the AI bubble. And I think this really is one of those times where we have to say, look at what the analysts are doing. And they're looking at companies like this and saying they're going to be strong. So if you're thinking that a company like UltraClean is going to be strong, then you really have to think that maybe this idea that AI demand is going to be weak is kind of not a big story.
Last question for this one is just, why is this a small cap company? Are there that many competitors out there? It seems like there would be quite a bit of demand for the services that they're providing.
They do have competitors in this space, but again, this company is looking at long-term contracts over a period of time. So they're a small cap company, but they're essential to the companies that use their services.
Okay, very interesting. Well, this is a unique name.
Yes,
and
absolutely.
That's what I love about small caps. It gets us into names we maybe haven't heard of before.
Absolutely.
If you're interested in small caps, I do want to share another report that you can check out. This is a list of 5 small cap stocks that had a really strong 2025. I know the first couple we've talked about here had a rough 2025, but are expected to have a strong 2026. You can scan this QR code or click the link in the description to get that full list of the 5 small caps with strong growth and future potential upside as well. That's in an article on MarketBeat.com right now. All right, Chris, let's move on to the third name on your list. What's that third small cap company you have?
Okay, so the third name I have is called Select Water Solutions. So as the name implies, this is a company that's all about water treatment and water solutions, which that's a growing industry anyway. You see a lot of large cap companies like Xylem and others that are very big in this space. What I found very interesting about this company is they have a very strong niche in the oil and gas industry. So they're providing water treatment services, but for that industry. Whatever any investor feels is going to happen with oil and gas stocks in the next 12 months, the price of oil may still have further to go. That's what a lot of analysts are saying. The reality is they're still pumping and they're pumping and they're pumping and they're pumping and they're pumping. And that means there's still going to be a demand for a company like SWWR and their services to provide the water treatment that's needed to make those operations work. They have a very strong presence for operations in the Permian Basin, which, as we know, is essential to U.S. drilling production. So the company they're positioned in all the right spaces right now.
All right, interesting. Now, did they have a strong 2025 at all?
They're down. Again, this is another company that's down. They're down over 20% year to date. But again, we're looking at what's coming in the future. And then in the future, analysts say that the stock has about 19% upside for next year. They've got the earnings growth. They're expected to see a lot of strong recurring revenue coming in. And that's part of the story here for them.
I think what's interesting about this list so far, the names we've talked about, so often we hear from viewers who don't like to see stocks that have run up so much.
Right.
This is the opposite of that.
Absolutely.
These are stocks that have not run up at all yet.
Right, I think that's actually one of the advantages in the small cap sector right now is you're going to find a lot of stocks that didn't necessarily perform well in 2025, but that's where the opportunity is for investors who have the risk tolerance to look at that.
All right, very interesting. Let's get to that fourth name on the list.
Okay, so the fourth one's kind of an oldie but a goodie. I think we talked about this like over a year ago, is Evolve Technologies. Ticker symbol is EVLV. This is a company that they provide metal detection screening for they provide it for schools, they provide it for churches, but they also provide it for major venues. Actually, you probably wouldn't notice it, but they're at a lot of major sporting arenas. They've got contracts with many of the big names in professional sports over all of the sporting categories. And it's basically just their technology is there to make sure people can get screened for weapons without being intrusive. So it's not like the TSA. It's not like you're going through the airport security. This is more of a free-flowing, and they've got the ability to monitor for weapons and things like that. And they use, of course, AI as part of their package.
Yeah, I remember talking about this earlier in the year. Very interesting company, and they make the security process so smooth and faster too, which is why a lot of those big arenas, big sporting events use them. I'm amazed this is still a small cap company, simply because there's so much demand for that right now.
There is, unfortunately, and I think you've seen this stock is actually, contrary to some of the other stocks we've talked about, this stock's up big this year. We're talking probably like 76% this year, and it's expected to keep going higher next year. Unfortunately, the recent headlines are the reason why, but there's a different reason too. I mean, that's not a real reason to buy the stock, just those headlines, but investors may want to be interested in the stock, especially if they followed the stock for a while. Is Evolve's business model, when we first talked about it, was they worked with a network of distributors. So they would sell their product to distributors who would sell, and then Evolve would get the revenue through these contracts. The problem with that for investors was that the contract revenue can kind of be lumpy. So it's like, when can Evolve really realize that revenue? When can they put it on the balance sheet? When can they say it was there? And that was creating issues. The company's not profitable. It's when are they realizing the revenue? They're getting rid of that distributor part of it, and they're going direct to the consumer. And so that's going to realize more positive cash flow for the company in the coming years. That's what's got, I think, a lot of analysts excited about the company, is they've tweaked the business model to accelerate that move towards being profitable, accelerating that revenue recognition. And I think that's why investors are excited about this stock going forward in 2026.
Yeah, I hope some investors were watching earlier when we talked about this almost a year ago.
Yeah.
Because it's had such a strong year.
It has.
This is a really interesting company, and I think the demand potential just makes sense.
It does. There's applications, again, it goes beyond the major sporting venues, but I think that's something that investors really need to think about, because those contracts tend to be long-term. Those contracts aren't going to be going away, and there's just huge demand for things like that. When you have large events that you need to move people in and out of without friction, but still putting safety as a premium.
Yeah, I think Evolve just makes so much sense. I think it makes so much sense that I actually am going to say this one's going to be my Bridget's Buys pick for this video. I think that this one is a really strong potential for a company. I think it should do really well in the future. So I'm going to add this to my watch list. If you want to check out that watch list and see how some of these stocks have performed, you can scan the QR code or click the link in the description. It's marketbeat.com/Bridget. Check out the watch list. I'm really excited to add this name to the list. I'm glad it popped up in the video.
Yeah.
You do have one more name for us, and this one is another kind of obscure name.
It is. It's Wolverine Worldwide. I'm actually kind of familiar with it because I live in Michigan, and this is a Michigan-based company. But the company it's a footwear company, and so a lot of investors would not be familiar with the company from the name, but they are probably very familiar with some of the names. The brand names are Maxell, Saucony, or Saucony, I believe is how it's pronounced. Hush Puppies, Keds. Yes. So a lot of those footwear brands. Stock's been down this year, again, like a lot of it. But one of the things that is interesting to note is, at one point this year, it was trading at around a 3-year high. And it's been sinking a little bit recently. Obviously, there's concerns over the strength of the consumer and where the consumer is going to be spending their discretionary dollars. But again, we go back to the methodology I was using at the beginning. Companies expected to have about over 10% earnings growth next year. Stocks expected to do very well next year. And I think it's based on that idea of consumer demand returning, some of the tax benefits from the Big Beautiful Bill kicking in next year, should see a stronger consumer, and that will be very beneficial to this brand.
Yeah, these are definitely some names that I've got Keds for my kids, I'm pretty sure.
Absolutely,
right?
Yeah.
I think that the thing about this company that's interesting is really it hinges on how well consumers are going to do in 2026. So it's interesting to see. I don't know if it's telling to see that analysts are expecting this company, a retail company, to do well in the new year. What are we thinking overall growth for consumer companies, consumer small caps like this one, in 2026?
That's always tough to forecast, and I think a lot of it, again, is going to have to do with what happens when some of these provisions from the Big Beautiful Bill actually kick in. That's really the gamble we're talking about. I shouldn't say gamble, but that's really what everybody's talking about. You either believe this is going to happen, it's going to strengthen the consumer, or it's not going to happen and the consumer's not going to be strong. But the reason why I believe analysts are looking so hard at the small cap sector is, if that consumer demand kicks in, it's going to be the small caps that are really going to take off, because they've been beaten down for so long. I mean, it's just been really tough to be a small cap investor. And this is the opportunity. You're seeing that activity in the Russell. You're seeing some of that rotation away from the NASDAQ. You're not seeing it necessarily go into the Dow. You're seeing it go into the Russell. And that's where the opportunity is for these small cap companies.
Yeah, I think it's a great point and something for investors to consider. Let me know what you think in the comments. Do you expect this momentum in the Russell 2000 to continue in 2026? Or is this just a blip at the year end because there's so much shopping happening right now? Who knows what it is?
Exactly.
We'll see. Let me know your thoughts in the comments. Chris, thank you so much for this great list today.
Thank you, Bridget. It's been wonderful being here with you.
Yeah, actually being in person, it's
Exactly.
fun. Thanks for watching, everyone. As always, happy investing.